People assume aging makes you wise. Wrong. It makes you habitual. And most habits are ruinous. By 50, you've committed your worst financial blunders. You survived the catastrophic ones, rationalized the painful ones, suppressed the rest. For most people, experience is just an elaborate system of self-deception. But here's what matters. Past 50, you can't afford to fix stupidity. You have to eliminate it entirely. You can't double down on foolishness and expect time to bail you out. Time isn't your ally anymore. It's working against you, shortening your runway every single day. People still think they can take bigger risks to recover losses. That delusion destroys more older investors than any market crash ever will. You don't need to swing harder. You need to stop swinging at terrible pitches. At 25, you can be wrong for a decade and still recover. At 55, one bad decade ruins 30 years. Unfair? Perhaps. Reality doesn't negotiate. The investment advice for people over 50 isn't exciting. It's not about seizing new opportunities. It's about avoiding old catastrophes. Don't try to be brilliant. Just refuse to be stupid. If that sounds boring, remember this. Compounding only works if you stay alive, solvent, and rational. You can't do any of that chasing fantasy yields or once-in-a-lifetime technology plays. Late 90s, I watched brilliant people annihilate fortunes on internet garbage they couldn't explain. They thought they were adapting. They were just aging and greedy. The pattern repeats endlessly. When people feel mortality pressing in, they start gambling and calling it investing. They tell themselves, one quick 30% before retirement. That's precisely how you work through retirement. Age isn't the issue. Discipline is. Young stupidity is educational. Old stupidity is tragic. Most people over 50 don't need more money. They need fewer mistakes, fewer opinions, fewer people whispering about catching up. Catching up to what exactly? The neighbor's yacht? Youth's illusion? The fantasy of outsmarting markets that consume geniuses for breakfast? Here's what I've learned. After 50, investing should resemble a fortress, not a battlefield. You don't win by attacking every opportunity. You win by defending against stupidity, yours and everyone else's. Stop pretending you're exceptional. Stop chasing narratives. Stop telling yourself you'll make up for lost time. Decades of ignoring compounding can't be fixed with one hot stock. You fix it by never letting your remaining capital die of stupidity. At your age, wealth preservation is wealth creation. The returns you don't lose make you rich. Remember, it's not how much you make that determines your future. It's how little you lose when everyone else goes broke. Markets reward patience and punish desperation. 50-year-olds forget that faster than anyone. The truth is simple. You can't change the past, but you can stop compounding your mistakes. That's the only compounding that kills you faster than disease. So here's my advice. At 50, stop thinking like a speculator. Start thinking like a custodian. You're not building empires anymore. You're defending them. Don't confuse boredom with risk. Boredom keeps you alive. Excitement gets you buried under margin calls. And if that sounds depressing, maybe you weren't investing. You were just gambling with sophisticated excuses because your biggest enemy isn't the market. It's you believing you're still 30. So sit down, think, cut your noise in half. And if you can't resist acting, make your next move smaller, slower, and smarter than your last. That's not pessimism. That's survival. Everyone wants safety. Nobody understands it. After 50, people buy safety like tourists buying counterfeit watches in Bangkok. Expensive, shiny, guaranteed to disappoint. They think bonds are safe, blue chip stocks are safe, government is safe. Then inflation arrives and devours their safety alive. Absolute safety doesn't exist. There's only intelligent risk management, and most people are terrible at it. When I was young, I watched old men in 1932 treat cash as king. They buried money in coffee cans. They starved in safety. That's not prudence. That's fear in a suit. You don't get rich avoiding all risk. You get rich avoiding stupid risk, the kind that feels comfortable because everyone's doing it. That's the trap for people over 50. They confuse familiarity with safety. Owning a big bank stock because it's always been there isn't safety. It's nostalgia with a ticker symbol. Nostalgia doesn't pay dividends. I've watched people hold dying businesses out of loyalty. They called it patience. It was denial. Real-world safety means knowing what could kill you and staying away. No leverage, no borrowed money, no complex derivatives that sound intelligent until they explode. If you can't explain your portfolio to a reasonably bright 12-year-old, you don't have a portfolio. You have a time bomb. By 50, you should have learned that lesson twice. If you haven't, you're the kind of student markets love to teach again, expensively. True safety is having enough cash to sleep well, enough good businesses to stay rich, and enough humility to admit you don't know what happens next. That last part, humility, is where most people fail. They age, and instead of becoming wise, they become certain. Certainty replaces youth's stupidity. It's more expensive because old people have more money to lose. They say things like, "This company's paid dividends for 100 years. So did Kodak. History doesn't protect you. Adaptability does." When I talk about safety, I mean durability. Can your investments survive the next decade without your cleverness? Can they keep compounding without your interference? If not, you're not investing. You're babysitting. At 50, you don't have time to babysit stupidity. Safety is the byproduct of rational behavior, not emotion. That means ignoring the crowd, even if that crowd includes your spouse, your broker, your golf buddies, especially your golf buddies. When people say, "I want something safe," they mean, "I want something that feels good today." That's not safety, that's anesthesia. Here's my rule. If something promises safety and high returns simultaneously, it's lying. Real safety never feels exciting. It's quiet, boring, like brushing your teeth. You don't notice it until you stop. That's the beauty of rational investing. It's not designed to make you feel brilliant. It's designed to keep you from feeling stupid. You don't need the next Tesla or cryptocurrency. You need assets that survive inflation, stupidity, and your own impatience. That's real safety, not some bond fund you don't understand, not some insurance salesman's pitch about guaranteed income. Safety is discipline. Safety is liquidity. Safety is saying no 99 times out of 100. If you're over 50, your portfolio shouldn't reflect your hopes. It should be a fortress built on your fears, rationally managed, deliberately boring. Because when the next storm hits, and it will, the clever don't survive. The cautious do, the dull ones, the ones who refuse to be sold a dream. Stop searching for safe investments. Search for rational ones. That's how you sleep through chaos without medication. Want to destroy your wealth after 50? Try proving how clever you are. I've seen it 1,000 times. Men who built fortunes through boring businesses suddenly decide they're investment geniuses. They sell cash flow for innovation. They trade patience for dopamine. They end up as sophisticated fools. Something about age makes people allergic to simplicity. They start believing wisdom means complexity. It doesn't. It means restraint. The older you get, the more you should avoid intellectual showmanship, because that's what it is. Performance, not intelligence. People over 50 love talking about diversifying into alternatives. It sounds intelligent at dinner parties. What it usually means is, I'm bored and want to play investor again. You cannot imagine how many people I've seen ruin decades of discipline with one stupid decision chasing cleverness. They forget the market isn't a debate club. You don't get paid for being articulate. You get paid for being right eventually. Most clever people don't have the temperament to be right eventually. They can't sit still. By 50, you should know boredom isn't a signal to act. It's a test to pass. But most can't resist. They open trading apps, read blogs, watch pundits, start believing they found the next big thing. It's like watching a middle-aged man buy a motorcycle, the illusion of vitality with the certainty of pain. Your financial mistakes come disguised as opportunities to stay sharp. You start saying, I just want to stay in the game, as if the game cares about your ego. Here's what I've learned. Smart investors don't need to feel smart. They need to stay solvent. Every year someone tells me, Charlie, I found the next Berkshire. And I tell them, no, you didn't. Because if another Berkshire existed, it wouldn't be obvious, and you wouldn't be the one who found it. Want to feel smart? Read philosophy. Want to stay rich? Stick to what you understand. Warren and I made our fortune not by being brilliant, but by being consistently untempted by 99% of what everyone else chased. Turns out avoiding idiocy pays far better than chasing genius. The problem is, people don't like that answer. It doesn't feed their ego, doesn't make them feel alive. They'd rather be wrong spectacularly than right quietly. That's not investing, that's theater. When you hit 50, stop trying to impress people. Start trying to survive yourself. You've already proven what you can do. Now the question is, can you keep it? That's where most fail. They mistake movement for progress, complexity for intelligence, luck for skill. If your financial plan depends on being clever, you've already lost. Cleverness doesn't scale. Discipline does. I remember a man who made a fortune in real estate. In his 50s, he decided he was missing the tech boom. He said, "I'm smart, I'll figure it out." He didn't. 2 years later, broke and humble, mostly broke. He didn't lose to the market, he lost to his own ego. The need to feel smart is the tax you pay for not knowing yourself. The market collects it with interest. So if you're over 50, here's the truth nobody likes. The less you try to prove, the more you'll keep. Stop trying to outsmart the world. Just stop being stupid, consistently, quietly, boringly. That's the Munger formula. You don't need to be Einstein to build wealth. You just need to avoid being the fool who thought he was Einstein. My advice, when you catch yourself thinking, this might be a smart move, ask instead, is this a necessary move? 90% of the time, the answer is no. And that's how you stay rich while everyone else tries to prove they're brilliant. Nobody discusses it, but most people don't go broke from bad investments. They go broke trying to look rich longer than they actually are. Lifestyle inflation is the silent killer of late life security. It starts as a reward. You tell yourself, I've worked hard for decades. I deserve this. Then suddenly, this becomes a new car, a second home, a third vacation, a fourth excuse. You don't even notice the shift because it feels earned. That's what makes it dangerous. At 50, your expenses don't just increase, they compound faster than your investments. Your tolerance for discomfort drops. Your appetite for convenience rises. If you're not careful, your financial margin evaporates in the name of quality of life. Let me be blunt. The biggest threat to your portfolio isn't the next recession, it's your own comfort. I've watched successful professionals who should have retired rich end up working part-time at 70. Not because they failed, but because they couldn't stop upgrading their lives. They traded financial freedom for granite countertops and imported wine. They didn't run out of income. They ran out of discipline. There's irony here. At 20, people are broke because they don't have money. At 50, people are broke because they don't have breaks. Warren and I used to laugh about this. We'd see people make $1 million annually but spend 1.2. They called it living well. I called it arithmetic failure. As you age, needs become inflated by habit. You convince yourself comfort level defines success. That's not success. That's addiction to lifestyle, to status, to the illusion of arrival. You think a man driving a Bentley at 60 is free? Most are just prisoners of their own taste. You can't scale happiness through consumption. If you could, rich people would be the happiest people alive. They're not. They're just better at hiding panic. I learned early that the easiest way to get rich is to stay slightly uncomfortable. Comfort kills hunger, kills perspective, eventually kills your returns. If you're over 50, you need less reward and more restraint. You don't need a yacht. You need peace of mind. You don't need 5-star vacations. You need freedom from worry. But the modern world sells the opposite. Luxury is security. Nonsense. Real security comes from knowing you could lose half your lifestyle tomorrow and still sleep well. If that sentence makes you uncomfortable, you built your life wrong. When I was younger, I saw people retire rich and die anxious. They'd built empires of expenses. Their money owned them every month. They needed more not for joy, but for maintenance. That's the trap. Most people fall into it right after 50, when they think they've earned the right to stop being rational. But compounding doesn't care about your feelings. It rewards restraint, not self-congratulation. I'm not telling you to live like a monk. I'm telling you to know the difference between pleasure and poison. Pleasure is a occasional. Poison is recurring. A fancy dinner occasionally, fine. An expensive lifestyle habit, fatal. You can't out-earn bad habits anymore. You could at 30, maybe 40. After 50, your earning power declines while your ego doesn't. That mismatch is where bankruptcy starts. You don't fix it with more money. You fix it by lowering your threshold for enough. People ask me, Charlie, what's the best financial move for someone over 50? Simple answer, downsize your ego. The fewer things you need to feel successful, the wealthier you become instantly. You don't even need a bull market for that. At Berkshire, we never built castles. We built systems. That's the difference between looking rich and staying rich. I've met people worth $500 million who are terrified daily because they built an empire of overhead. And I've met old men with $3 million who sleep like babies because they built simplicity. At your age, that's what matters. Peace, not prestige. Control, not comparison. Sufficiency, not spectacle. Here's the real trick to surviving your 50s financially. Stop trying to impress people you don't like with money you can't replace. Buying things you don't need, that's not wisdom. That's freedom's opposite. And if you learn that lesson late, at least you learned it before it killed you. At 25, risk is a teacher. At 55, it's a predator. Markets don't care how many gray hairs you have or how many successful years are behind you. They only care whether you're rational today. The trouble with most people over 50 is they manage money like they manage nostalgia. They remember what worked in 1997 and assume it'll work forever. That's not risk management. That's wishful thinking in a suit. When you're running out of time, how you think about risk must change. You don't get paid for courage anymore. You get paid for clarity. You can't afford to take risks you don't understand. Yet every day I watch people my age do exactly that. They chase private deals, crypto schemes, pre-IPO fantasies, because they still think risk equals opportunity. Number, at your age, risk equals regret. The older you get, the more you must separate necessary risk from ego-driven risk. Necessary risk keeps you in the game. Ego risk ends the game. Let me give you an example. Early days, Warren and I would sometimes find workout situations, special investments with limited downside and clear payoff. We weren't being brave. We were being cautious, making small bets with big logic. That's intelligent risk when time and math are on your side. But once people pass 50, they forget what intelligent risk looks like. They mistake movement for mastery. They want action. That word, action, has bankrupted more retirees than recessions. You can survive bad luck. You can't survive stupidity disguised as boldness. Here's the truth. At 50, your portfolio is no longer about maximizing return. It's about minimizing regret, because the one thing you can't recover is time. Lose 30% of your net worth at 30. You've got decades to rebuild. Lose 30% at 60. That might be the rest of your working life. So when someone pitches you an exciting opportunity, ask one question. If this goes wrong, can I recover? If the answer is an immediate yes, walk away. People love quoting, no risk, no reward. That's half true and fully dangerous. There's also plenty of risk with no reward. In fact, that's most of what's offered on Wall Street. Markets are designed to exploit impatience, and impatience gets louder as the clock ticks faster. That's why older investors get suckered into high-yield garbage. They're not chasing profit, they're chasing time. But time doesn't bargain. It only punishes those who pretend it does. Your biggest risk after 50 isn't losing money, it's losing margin for error. That's what kills you financially and psychologically. You need more buffer, not more bravado. You need to stop optimizing and start fortifying. That means cash reserves, simple holdings you understand, never needing to sell in a panic, accepting that average returns with peace of mind beat high returns with heartburn. Here's something people never realize until it's too late. There's a compounding effect to not screwing up. Avoiding one major mistake every decade is worth more than chasing every new fad. You don't have to double your money every few years. You just have to make sure you don't lose it. Warren used to say the first rule of compounding is never interrupted unnecessarily. The unspoken second rule, don't let desperation do the interrupting for you. When you feel that creeping urgency, that voice saying, I need to catch up, remind yourself, Catching up to whom? To what? To a fantasy of youth that never existed? At 50, you can't outtrade the 20-year-olds, but you can outlast them. That's where the real edge is. Let them chase momentum. You chase endurance. Because the investor who survives every storm eventually inherits the calm. I've said it before. You don't need to be brilliant. You just need to avoid stupidity long enough for compound interest to look like genius. And the way to do that after 50 is brutally simple. Say no more often. Hold more cash than you think you should. Own fewer things you don't understand. Never risk what you need for what you don't. That's not conservative, that's rational. And rationality, especially in old age, is rarer than any hot stock tip. Every few months, someone over 50 asks me the same question. Charlie, is it too late for me to start investing seriously? My answer is always the same. It's never too late to stop being stupid. That might sound harsh, but it's true. The single best decision you can make after 50 is to stop making decisions that hurt you. Rationality compounds faster than money. Markets don't care about your age, only your behavior. So if you can fix that, even late in life, you've already beaten most investors half your age. People love talking about late starters as if wealth creation were a race you could miss. But the real race isn't against time. It's against stupidity, ego, and impulse. If you're 50 and just starting, you don't need brilliance. You need clarity. You don't need to catch up. You need to stop digging. Let me tell you something from watching human nature for nearly a century. The moment you stop doing dumb things, life gets dramatically easier. That applies to money, relationships, and waistlines. But here's the problem. People want redemption, not discipline. They want a shortcut to make up for lost time. They ask me, Charlie, what's the fastest way to double my money? And I tell them, stop having it. Because doubling your money is hard. Not losing it is simple, but nobody finds it exciting. When you're older, excitement is your enemy. You don't need fireworks. You need predictability. You need systems, not adrenaline. You need to understand how not to blow up. You can build wealth from 50 onward if you treat your behavior like a business and your ego like a cost center. Audit both. Cut waste. Eliminate stupid risks. Start by asking yourself, what mistakes have I been repeating for decades? The answer is usually some mix of impatience, envy, and overconfidence. The fix is free. Just stop feeding them. I've seen 70-year-olds learn rationality faster than 20-year-olds ever could because pain is an excellent teacher. The advantage of age isn't experience, it's scars. They remind you what not to do. You don't need to reinvent yourself. You need to subtract nonsense. Subtraction is the most underrated form of improvement. Warren and I built Berkshire by not doing 1,000 things other people did. We didn't buy into every boom or sell in every panic. We didn't rebrand or innovate. We just stayed sane year after year. The older you get, the more sanity becomes a superpower. You can't move fast anymore, but you can move correctly. That's your edge. Compounding doesn't demand youth. It demands consistency. A 20-year-old who jumps in and out of fads will lose to a 60-year-old who quietly compounds for 15 years straight. That's math, not magic. If you're over 50, the worst thing you can do is despair. Despair leads to gambling. Gambling leads to regret. Forget what you should have done in 1999 or 2008. Those versions of you are gone. You're here now. The smartest time to start being rational is now. The best investor isn't the one who started early. It's the one who stopped doing dumb things earliest. If that's today, congratulations. You're already ahead of most people. You don't need to build an empire. You just need to build a stable base that doesn't crumble when life punches you in the face. And it will. Keep your investments simple. Keep your expectations realistic. Keep your behavior boring. If someone calls you too cautious, take it as a compliment. That's what wisdom sounds like to the reckless. Remember, getting rich is optional. Staying rational is mandatory. If you miss the first half of the game, fine. Just make sure you're still standing when everyone else loses theirs in the second half. Late starters don't need luck. They need discipline, humility, and a working calculator. That's how you finish strong, not by chasing miracles, but by refusing stupidity. And that's something you can start doing right now, at any age, with any amount. Most people don't retire. They just stop working and start decaying. They think retirement is freedom. What it usually is, vacancy, a slow drift into boredom, bad decisions, and daytime television. When people over 50 talk about retirement planning, they mean money. When I talk about it, I mean purpose, because the numbers are meaningless if you have nothing left to do but count them. I've seen men worth hundreds of millions fall apart the moment they had no scoreboard. They'd built their entire identity around activity, then replaced it with leisure. Leisure is wonderful in small doses. Overdose on it and you rot from the inside. Retirement is the most dangerous psychological experiment most people ever run, and they run it unprepared. They tell themselves, I'll finally relax. But the mind doesn't retire. It just looks for new ways to get into trouble. That's why so many people start trading stocks right after they retire. They mistake stimulation for purpose. They end up poorer and angrier than before. Retirement isn't a reward. It's a responsibility. You're responsible for not letting your idle time ruin you. At Berkshire, Warren and I never planned to retire. Not because we love work so much, but because we hate stupidity. And boredom is the gateway drug to stupidity. If you're over 50, you shouldn't be thinking, when can I retire? You should be thinking, what do I want my days to look like when nobody's forcing me to do anything? If the answer is to sit around and watch markets, good luck. You'll turn investing into entertainment. Entertainment is a terrible investment strategy. The people who handle retirement best are the ones who replace money goals with meaning goals. They build habits that compound purpose instead of wealth. They mentor, they teach, they learn, they contribute. They stop chasing yield and start chasing usefulness. That's what keeps you sane after 50. The truth is, the human brain needs challenge. When you remove that, it invents drama. That's why retirees start making wild investments. They're not chasing returns. They're chasing relevance. Here's my blunt advice. Don't retire from something. Retire to something. Retire to teaching your grandchildren how compounding works. Retire to reading books you never had time for. Retire to thinking deeply, walking slowly, staying curious. Just don't retire to the couch. The couch kills more men than bear markets ever did. While you're at it, stop obsessing about passive income. The only truly passive thing in life is death. Everything else requires attention, maintenance, and effort, even peace of mind. You want freedom? Learn to control your desires. You want happiness? Learn to stay useful, because purpose, not money, is what gets you out of bed in the morning at 70. If you lose that, no amount of dividends will save you. I've seen old investors stay sharp, not because they traded well, but because they stayed interested. They never stopped learning, never stopped thinking, never confused being done with being dead. Warren once said, "We tap dance to work." That wasn't about the work itself. It was about the mindset, the joy of still having a reason to move. If you want a good retirement, build it around things that don't require money to enjoy. Because one day the market will crash, the economy will wobble. But if your happiness depends on curiosity, simplicity, and human connection, you'll be inflation-proof. Retirement isn't an escape from work. It's an invitation to redefine it. You can stop earning, but you can't stop exerting. Exert your mind, exert your patience, exert your gratitude. Don't fall for the myth that retirement is a finish line. It's not. It's just another stage where life tests whether you've learned to live without illusions. You spent your first 50 years learning how to make money. Now spend the next 50 learning how not to be owned by it. That's a far harder and far more worthwhile game. After 50, money stops being the main scorecard. It just takes people another 20 years to realize it. The truth is, once your basic needs and modest comforts are covered, money loses its utility fast. It becomes numbers on a screen, zeros chasing ego. Beyond that, what you really need is peace. And peace doesn't come from a bigger portfolio. It comes from fewer dependencies, financial and emotional alike. I've known billionaires who couldn't sleep, not because they didn't have enough, but because they had too much in motion, too many moving parts, too many people to impress, too many toys to maintain. They were rich in assets and bankrupt in calm. At some point, wealth stops being about addition and starts being about subtraction. How much noise can you remove from your life? How many people's opinions and obligations can you stop renting space to? That's the real wealth after 50, freedom from unnecessary burdens. You can measure a man's wisdom by how little drama he tolerates. The young think wealth means more choices. The old realize it means fewer stupid ones. If you wake up and your life is simple, predictable, and calm, congratulations. You've achieved the highest form of luxury. Most people never get there. They're too busy upgrading the furniture of their prison cells. At 50, you should stop thinking about how to make your money grow and start thinking about how to make it work without you. Not through magic funds or slick advisors, but through simplicity, a few good businesses, a reasonable amount of cash, and a temperament that doesn't panic when the world does. That's wealth. It's not glamorous, not exciting, but neither is sleeping soundly until you lose the ability to do it. You want to know what real poverty looks like? Being unable to enjoy what you already have, and I've met plenty of millionaires living that way. Here's something you learn when you get old. The scarcest asset on earth isn't money, it's attention. Your attention determines your happiness. If it's scattered across every gadget, market headline, and neighbor's opinion, you'll stay restless no matter your net worth. But if you can focus it on gratitude, learning, and a few worthy pursuits, you'll feel rich long before your accountant does. At my age, I measure wealth by subtraction, less envy, less nonsense, more time with people I actually like. The older you get, the more you realize those aren't luxuries, they're necessities. Money is just a tool for buying back your time and guarding your mind. If you use it for anything else, it ends up owning you. People ask, Charlie, what's the best investment after 50? My answer, invest in not needing much. The less you need, the harder it is for life to hurt you, and the easier it is to smile when others panic. I've watched people ruin their later years chasing a few more basis points of return. They optimize spreadsheets while their health, friendships, and curiosity decay quietly. That's not wealth. That's tragedy with good accounting. Real wealth is independence. Waking up when you want. Spending time how you want, thinking what you want without fear of losing approval or income. You can't measure that in dollars, but you can feel it in the absence of anxiety. If you're over 50, start deleting instead of adding. Delete toxic relationships. Delete pointless goals. Delete envy disguised as ambition. What's left will be enough. It always has been. Remember, you don't need to own the world. You just need to own yourself. That's the wealth you can't lose in a crash, can't tax away, and can't outlive. And the sooner you start compounding peace instead of possessions, the richer you'll die, no matter the size of your portfolio. You can't be happy and envious at the same time, but try explaining that to someone staring at his neighbor's new house at 58. Envy is the last and most expensive addiction people develop. It's the only one society rewards. When you're young, envy makes you ambitious. When you're old, it makes you foolish. You start making moves that aren't about need or logic, just comparison. At 50, envy is lethal because you finally have enough to lose. You see someone your age who made it bigger, and instead of gratitude, you feel panic. You start thinking, I should have done what he did. But you forget you didn't live his life, take his risks, or pay his hidden costs. You're competing with a ghost version of someone you barely understand. I once told a man worth $200 million that envy would ruin him. He laughed and said, Charlie, I don't envy anyone here. 6 months later, he sold half his portfolio to chase a tech fad because his golf partner made 30% on it. He lost millions trying to catch up, not to the market, but to his own insecurity. Envy doesn't look like greed. It looks like imitation. You stop being yourself. You start borrowing other people's goals, timelines, mistakes. At that point, you're not investing. You're impersonating. The most powerful financial decision you can make after 50 is to stop comparing. Comparison is the thief of both wealth and sanity. Recessions come and go. Envy compounds. It grows every time you open your phone, drive past a bigger house, or hear about someone's passive income empire. That's how envy works. Quietly, rationally, poisonously. It doesn't yell. It whispers, you're behind. You should have more by now. You're running out of time. That whisper drives people to ruin. Not the market, not the Fed, not inflation. Envy. Because envy forces you to abandon patience. And once patience is gone, compounding dies. Warren and I have watched entire generations of investors destroy themselves by reacting to envy. In 1999, it was the tech guys. In 2021, it was the crypto kids, different symptoms of the same disease. And it's always worse for older investors because envy doesn't just make you greedy, it makes you desperate. Desperation and compounding don't mix. Here's the real irony. You spend your first 50 years trying to build wealth so you can finally stop caring what others think. Then you spend your next 20 years losing it because you still care. That's the dumbest loop in finance. If you want real peace after 50, kill envy before it kills your judgment. No market strategy can protect you from that virus. There's no vaccine for insecurity. The antidote is gratitude and self-respect. You can't fake either. You earn them by living within your means and thinking independently. Easy to say, I don't care what others think. Harder to turn down the investment everyone's bragging about. That's the real test. Here's how I define maturity. It's the moment you stop upgrading your life and start optimizing your peace. Every unnecessary purchase, every risky investment, every comparison, that's rent you're paying to envy. Stop paying it. Warren once told me, it's not greed that drives the world, Charlie. It's envy. He's right. And the tragedy is that envy doesn't just make people poorer, it makes them miserable long before that. You can't envy someone and think clearly about your own life. Those two things don't coexist. So if you're over 50 and still measuring your success by someone else's yardstick, you've already lost the game. The moment you can look at another man's success and feel nothing but curiosity, you've won, because now finally you're free to play your own game. And the funny part is, that's when wealth starts compounding again, quietly, privately, independently, not because you outsmarted anyone, but because you stopped trying to. When you reach 50, you should stop asking, how do I get richer? And start asking, how do I stay sane? Because sanity, not money, is what determines whether your final decades are peaceful or miserable. Most people spend the first half of life learning how to make money, and the second half learning how to keep it. The smartest ones spend both halves learning how to keep their judgment intact. Rationality is the ultimate wealth. It doesn't fluctuate with markets, doesn't depend on youth or luck, doesn't vanish with inflation. It's portable, durable, and self-reinforcing. That's what I've been trying to teach for decades. You don't need a high IQ. You need a high ability to avoid self-inflicted wounds. By 50, you've seen enough bubbles, fads, and fools to know the world never changes much. Just the headlines do. Same greed, same envy, same panic, recycled every decade with new technology. And yet, people still fall for it. Why? Because they never internalize the lesson. They think wisdom is knowing what to do. It's not. It's knowing what not to do and having the discipline to actually not do it. The rational life after 50 is built on three things: temperament, simplicity, and endurance. Temperament means keeping your cool when others lose theirs. It's the ability to sit still while the world screams for attention. Simplicity means saying no far more often than yes. No to complexity, no to speculation, no to people who make you dumber. And endurance means structuring your life so you can survive mistakes, yours and everyone else's. Because no matter how careful you are, you'll still make some. The goal isn't perfection, it's resilience. Warren and I never chased perfection. We chased longevity, financial and mental. We wanted to be old and clear-headed, not old and bitter. That was our real goal. If you're over 50, your greatest leverage isn't compounding capital, it's compounding wisdom. Every year you stay rational, your odds of survival go up. Every year you avoid envy, debt, or drama, your real wealth multiplies quietly. You don't need new tricks. You need fewer temptations. You don't need more opportunities. You need more filters. Here's a little paradox for you. The older I got, the more I realize life's edge comes from doing less. Less reacting, less chasing, less pretending. Markets reward clarity. Life rewards restraint. If you can manage both, you'll glide through old age while everyone else panics through it. Don't chase what you can't control. Don't explain what doesn't need explaining. And don't confuse activity with progress. If you find yourself constantly busy after 50, it probably means you're avoiding something, usually your own thoughts. Learn to sit quietly with them. That's where real insight comes from, not from CNBC. One last thing, stop worrying about legacy. Most people who talk about legacy are just afraid of being forgotten. Here's the truth. You will be. Everyone will be. So do the right things because they're right, not because you want credit later. Live rationally. Live peacefully. That's the only game worth winning. If you can leave behind a few people who think better because you existed, you've done more than enough. You don't need a statue. You just need clarity. So here's my final piece of advice for anyone over 50. Protect your mind, not your image. Protect your peace, not your pride. And protect your time because it's the only thing that stops compounding the moment you waste it.